Good morning, everyone. So today we will discuss about the value-added tax. So before that, let me present to you the topic outline of this topic. So the topic outline is the basic concept of VAT, persons liable, VAT of sales of goods or properties or importation or services. Exempt transaction, output tax, input and input tax, transitional input tax credit, presumptive input tax, VAT on government sales, and compliance requirements. Next is also a topic outlined filing and payment due dates, staggered filing, summary list of sales and purchases, taxability of privileges, stores, VAT treatment of security agencies, agricultural contract grower, RR 97-2010. So, first is the basic concept of VAT. But before that, let us define what is VAT. VAT defined as a tax on the value added to the purchase price or cost in the sale or lease of goods, properties, or services in the course of trade or businesses. It is also an indirect tax, and amount of tax may be shifted or passed on to the buyer, transferee, or lease of the goods. Next is the background of VAT. So the background of VAT. VAT is a business tax levied on the sale of goods, properties, and services, and on importation of goods. VAT also is a universal taxation system. VAT has various major and most controversial amendments. Number 1 is the EO 273 or VAT Law 1988, January 1, 1988. Second is the RA 7716 or the EVAT. Third is the RA 8241 or the IVAT. 4 is the RA 8242 or the Tax Reform Act of 1997. And all of those VAT has a new expanded VAT law. It is the Republic Act 9337 or the new expanded VAT law. It is signed into law on May 24, 2005. Implementation withheld due to TRO. TRO was lifted by the SC on October 18, 2005. Became effective November 1, 2005. Implementing rules and regulation. RR 14-2005 was superseded by RR 16, 2006, amended by RR 2, 2007, and RR 4, 2007. So, why is it VAT necessary? So, here is the VAT Reform, Republic Act 1993-37. The current Philippine fiscal condition requires that immediate attention be given to fiscal reform. In 2004, debt service ratio was 86.1% of the government revenue. Interest payment alone was 37.4% of the government revenue. And infrastructure and other capital expenditure were only 10.87% of the government expenditure of the same year. Next is the objective of VAT. So here are the objectives of VAT. Broaden tax base, provide an audit trail, simplify business taxation. So Next is the persons liable. Persons liable according to Section 105 of NIRC. So, persons who are liable for VAT are sellers in the course of trade or businesses like sales, barters, exchange, leases, goods or properties, including deems, sales, renders services, provided the aggregate sales or receipt exceed 1.5 million pesos or who OPT to register as VAT. Next is the importer, whether or not in the course of trade or businesses, like importation of goods. So, what do you mean by in the course of trade and businesses? So, in the course of trade and businesses defines the regular conduct or pursuit of a commercial or an economic activity, including transaction incidental thereto, by any person regardless of whether or not the person engaged therein is a non-stock or non-profit private organization, irrespective of the disposition of its net income and whether or not it sells exclusively to member or their guest or government entity. Next is the VAT rates according to Section 106, 107, and 108 of the NIRC. 10% is up to January 31, 2006. 12% is effective February 1, 2006, and also the zero rate. Transactions covered of those percents: sales or exchange of goods, properties, importation, sales or exchange of services, transaction deemed, sales zero rate, sales of goods or properties or services, effective zero rated transaction. So, VAT has a basis, and there is a basis of VAT on goods and properties. Gross selling price. Gross selling price means the total amount of money or its equivalent which the purchaser pays or is obligated to pay to the seller in consideration of the sale, barter or exchange of the goods or properties, including VAT. The excise tax, if any, on such goods or properties shall form part of the gross selling price. Next is the VAT importation. If based on value, total value used by the BOC in determining tariff and custom duties plus custom duties, excise taxes if any, and other charges paid by the importer prior to a trade. If based on quantity and volume, VAT shall be based on the landed cost plus excise taxes. Next is the VAT service list or VAT on services or list of prop. Gross receipt refers to the total amount of money or its equivalent representing the contract price, compensation, service fee, rental or royalty, including the amount of charge for materials supplied with the service and deposits applied as payment for services rendered and advance payment actually or constructively received during the taxable period for the service performed or to be performed for another person, including VAT. So, Here is the sales or exchange of property. Next is the sales or exchange of goods and properties according to Section 106 of the NIRC. The section says they refer to all tangible and intangible objects which are capable of pecuniary estimation and shall include real properties held primarily for sale to customers, installment plan on installment payment plus interest plus penalties actual or constructively received, where the initial payment is lesser than 25% of the GSP. Different payment bases treated as cash sales, where the initial payments is greater than 25% of the GSP. Residential lot is greater than 1.5 million and residential house and lot is greater than 2.5 million. Held for lease in the ordinary course of businesses. Number 2, right or privileges to use patent, copyright, design or model plan, secret formula or process, goodwill, trademark, trade name, trade brand or other like property or right. The right of Number 3 is the right or the privilege to use the Philippines of any industrial, commercial or scientific equipment. Number 4, the right or the privilege to use motion picture films or films, tapes, and disc. And number 5 is radio, television, satellite, transmission and cable, television time. Next is the goods or properties, sale on non-food agricultural products, marine, sale on cotton and cotton seeds in original state, sale of importation of coal, and so on and so forth. That is here presented in the slide. So next is the zero rate sales of goods or properties. It is a taxable transaction for VAT purposes but shall not result in any output tax, input tax on purchases of goods, properties, or services related to such zero-rated sales shall be available as tax credit or refund. A is export sales. B is foreign currency denominated sales. C is the sales to person or entity deemed tax exempt under the special law or international agreement. So, zero rated is effective only on the sale of goods and properties. Shall refer, or rather it's not only, effectively zero rated sales of goods and properties, section 6 of RR 4 2007 shall refer, the section says that shall refer to the local sales of goods or properties by a VAT registered person to a persons or entity who was granted indirect tax exemption under this special law or international agreements to which the Philippines is a signatory, such as ADB, IRRI, and etc., shall be effectively subject to VAT at zero rate. Requires no prior BIR approval. Next is the transaction deemed sale, section 106 B. One is the transfer, use, or consumption not in the course of business of goods or properties originally intended for sale or for use in the course of business. 2 is the distribution or transfer to shareholders or investors share in the profit of VAT person property or dividends, or B, creditors in payment of debt or obligation. Sorry. 3 is consignment of goods if actual sale is not made within 60 days. 4 is the retirement from or cessation of business with respect to inventories of taxable goods existing as of such retirement or cessation and change of tax detail or status from VAT to non-VAT. Next is the rules invoicing and recording of deemed sales transaction. Memorandum entry in the subsidiary sales journal to record withdrawal of goods for person use must be made. For distribution to shareholders, the creditor's invoice shall be prepared at the time of the occurrence of the transaction recorded in the subsidiary journal. Next is the for retirement or cessation of business. Inventory shall be prepared and submitted to RDO not later than 30 days from retirement. Invoice shall be prepared for the entire inventory. Entry in the subsidiary journal, sales journal. Note, if business is to be continued by new owner, the entire amount of output tax shall be allowed as input tax. Next is the importation of goods, Section 107 of the NIRC. The importation of goods means or refers to the goods acquired from foreign countries by a person non-exempt entities or exempt entities, whether or not in the course of trade or businesses. No VAT shall be collected under Section 1091. Goods sold, transferred, or exchanged in the Philippines to non-exempt person or entities, the purchasers, transferees, or recipients shall be considered importers, therefore subject to all internal revenue tax. Next is the sales or exchange of services, Section 108 of the NIRC. This means or it refers to the performance of all kinds of services in the Philippines for others for a fee, remuneration, or consideration, whether in kind or in cash, including those performed by the following. First is the construction and service contractor. Second is the stock, real estate, commercial, customs, and immigration brokers. Third is the lessors of property, whether personal or real. Fourth is the persons engaged in warehousing services. 5 is the lessors, distributors of cinematographic films. 6 persons engaged in milling, processing, manufacturing, or repacking goods for others. 7 is proprietors, operators, or keepers of hotels, motels, rest houses, pension houses, inns, resorts, theaters, and movie houses. 8 is the proprietors or operators of restaurant, refreshment parlors, cafes, and eating in places, including clubs and caterers. 9 is the dealers in securities. 10 is lending investors. 11 is transportation of goods or cargoes. 12 is the common carriers by air and sea relative to their transport of passengers, goods or cargoes from one place in the Philippines to another place in the Philippines. Third is the sales of electricity by generation, transmission, and or distribution company. Fourth is the franchises. 14 rather is the franchises grantees. 15 mature insurance companies exempt from CRAB, including surety, fidelity, indemnity, and bonding companies. 16 is other similar services or use of the physical or mental faculties. So, sale or exchange of services includes A. Lease or the use of rights or privileges, and so on and so forth. Here are the sale of exchange or exchange of services newly covered sale of the artist of his work of art, literary. Here, so zero rate sales services. It is a taxable transaction for VAT purposes but shall not result in any output tax. Input tax on purchases of goods, properties, and services related to such zero-rated sales shall be available as tax credit or refund. A is the service performed in the Philippines. 1 is the processing, manufacturing, or repacking goods for other persons doing business outside the Philippines, which goods are subsequently exported, where services are paid for in acceptable foreign currency and accounted for in accordance with the rules of the regulation of the BSP or the Bangko Sentral ng Pilipinas. So, service number 2 is service other than processing, manufacturing, or repacking rendered to the person engaged in the business conducted outside the Philippines or to a non-resident person not engaged in business who is outside the Philippines. When the services are performed, the consideration for which is paid for in acceptable foreign currency and accounted for in accordance with the rules and regulations of the BSP. Third is the service rendered to person or entities whose exemption under special laws or international agreement to which the Philippines is a signatory effectively subjected to the supply of such services to 0% rate. 4 is the service rendered to persons engaged in international shipping or air transport operation, including leases of properties for use thereof, not pertain to transport of passengers, goods, or cargoes from one place in the Philippines to another place in the Philippines. 5 is the service performed by the subcontractors and or contractors in the processing, converting, or manufacturing goods for an enterprise whose export sales exceeds to 70% of the total annual production. 6 is the transport of passengers and cargoes by air or sea vessels from the Philippines to a foreign country. And 7, sale of power or fuel generated through the renewable source of energy such as but not limited to biomass, solar, wind, hydropower, geothermal, ocean energy, and other emerging energy source using technologies such as fuel cells and hydrogen fuels. So, zero rated is effective in services according to Section 13 of RR4 2007 shall refer to the local sales of services by a VAT registered person to persons or entities who has granted indirect tax exemption under special laws or international agreements to which the Philippines is a signatory, such as ADB, IRRI, etc., shall be effectively subject to VAT at zero rate. Requires no prior BIR approval. Next is the exempt transaction. Section 109 of the NIRC. Here are the list of the exempt transaction according to Section 1091AX of the Tax Code. So it is listed here. A to K. LMNOPQ. Oh, so exempt versus zero rate transaction. Exempt transaction, sales of goods, properties and services, and the use or lease of properties is not subject to VAT. It means no output tax. Seller is not allowed to claim input tax. So, zero-rated transactions subject to VAT but will not result to output tax. Seller is entitled to claim input tax. So, their differences is exempt transaction is not allowed to claim input tax, and while the zero-rated transaction, the seller is allowed or entitled to claim input tax. So, next is the output tax and the input tax. So, when we talk about output tax, it means the value-added tax due on the sale or lease of taxable goods or properties or services by a VAT-registered person, and the VAT rates is 12% or 0%. So, when we talk about output tax, it is a tax collected it is a tax paid or charged to the customer. Okay? So, next is the input tax. When we talk about input tax, according to Section 110 of the NIRC, is the value-added tax due or paid by a VAT-registered person in the course of his trade or businesses. So, output tax is charged to the sale of goods, while the input tax, it is the tax paid for the purchases of goods. So, creditable input tax. Any input tax evidenced by a VAT invoice or official receipt shall be creditable against the output tax. So, input tax on domestic or importation of goods, input tax that can be directly attributable, a ratable portion of the input tax which cannot be directly attributed to either activity. So, the sources of the input tax. So, sources of the input tax is the purchases or importation of goods. Next is the purchase of services on which VAT has been actually paid. Purchases of real properties, purchases of services or which the VAT was actually paid, and transitional input tax, presumptive input tax, and standards input tax. Spread of VAT on capital goods. Input tax on depreciable capital goods, the aggregated acquisition cost of which net of VAT in a calendar amount exceeds to 1 million, shall be spread evenly over 60 months of their useful life, whichever is shorter. If capital goods is sold within 5 years or prior to the exhaustion from input VAT thereon, the entire unamortized input tax on the capital goods sold can be claimed as the input tax credit during the month per quarter when the sale was made. Option 2, apply for refund or tax credit certificate of sales goods has been withdrawn. So, how VAT operates? So, here are the example of how VAT operates. So, there. So, first seller. So, when we talk about seller, nagbaligya siya. So, price charge is 100 pesos. Output VAT is 12. Total of 112. So, 100 minus 12, it is equal to 12 pesos, and these 12 pesos will be paid to the BIR. So, next is the second seller. Purchases. In first seller, the seller has only have a transaction of sales only, while in the second seller, it has a transaction to purchases and sales. So, second seller purchase and purchase and paid a price of 100 pesos, input VAT of 12, and one total of 112. And price, and she sells the goods she purchased. So, she sells that into 120, and the output VAT is 14.40, total of 134.40. So, 120, 130. So, here is the formula for the VAT payable. Output tax, the formula for the output tax is equal to sales times 12% less input tax. Formula for the input tax is purchases times 12%, and you have to less the output tax to the input tax, and that is our VAT payable. So, the journal entry upon the purchases of goods with invoice price of 16,000. So, purchases of 15,000 and input tax of 1,800 and cash of 16, credit of 16,800. So, the journal entry upon sale. So, the transaction is sales of 22,400 inclusive of VAT. So, when we say inclusive, it is the output tax there is included. So, cash is 22,400, sales of 20,000, debit cash 22,400, credit sales and output tax, sales with amount of 20,000 and output tax with the amount of 2,400. So, when we remit the VAT to the BIR, the VAT there is the VAT payable to the BIR. So, here is the journal entry. So, output tax is equal to 2,400, input tax of 1,800, VAT payable of 6,600. So, and VAT payable of 600 and cash of 600. Credit and debit. The question is, where did we get the amount of 600? So, just follow the formula. The output tax minus less input tax, and that is our VAT payable of 600 pesos. Next is the transitional input tax. Section 111A of the NIRC. Transitional input tax means a person becomes liable to VAT or elects to be VAT registered person shall be allowed input tax of 2% of the value of the inventory or the actual VAT paid, whichever is higher, subject to the filing of inventory list. So, here is the example of the transitional input tax. So, Mr. A becomes liable to VAT starting January 2011. He has 200 pesos worth of inventory. Actual VAT payments on purchases from VAT registered suppliers were 18,000 pesos. So, the allowed transitional input tax is 18,000 pesos. The 2% of the 200,000 pesos is 4,000 pesos. So, since 4,000 is lower than 18,000 pesos. So, next is the presumptive input tax. Section 111 of Section 111B of the NIRC. This section says, presumptive input tax is 4% of the gross value in money of purchases of primary agricultural products which are used as inputs to their production, like sardines, mackerel and milk, refined sugar, cooking oil, packed noodles based instant meals. So, next is the refund or tax credit or of input tax, section 111 of the NIRC. Any VAT registered person whose sales are zero rated or effectively zero rated may, within 2 years after the close of if the taxable quarter with the sale was made, apply for the issuance of a TCC. Person whose registered has been cancelled due to retirement or cessation of business or due to change in the cessation of status may, within 2 years from the date of cancellation, apply from the issuance of a TCC. So, Section 112 of the NIRC, apply from the issuance of TCC within 2 years. Zero rated or effectively zero rated sales within 2 years after the close if the taxable quarter when the sales was made. Next is the person who's re-registered has been cancelled due to retirement of cessation of business or due to change in the cessation of status may, within 2 years from the date of cancellation. So, there is a VAT on government sales. So, sales of goods and services to government is subject to 12% VAT. So, next is the 5% VAT withheld represent the net VAT payable of the seller. The remaining 7% effectively account for the standard input tax in lieu of the actual input VAT. If the actual input VAT exceeds to 7% of the gross payments, the excess may form part of the seller's cost, and if the actual input VAT is less than 7% of the gross payments, the difference must be treated as income of the seller. The income received from the government, while subject to final withholding on VAT, still be reported in VAT return. So, here is the sample sales to government. So, sales to government is 200,000 pesos. Malt purchases of 14,000. VAT payable, output tax is 24%. So output tax is 24,000. So where did we get the 24,000? We just multiply the 200,000 pesos here into 12% since the 12% is our fixed VAT. So less 7% standard input, 14,000. So where did we get the 14,000? Just simply 200,000 multiplied by 7%. So, output tax less standard input is equal to VAT payable of 10,000 pesos. Less with the final withholding tax is equal to 10,000. So, where did we get the 10,000 here? Is 200,000 pesos multiplied by 5%. So, 10 minus 10 is equal to 0. Next is the apportionment of input tax on mixed transaction. Input tax directly attributable to VAT-able transaction may be recognized for input tax credit. Input tax directly attributable to VAT-able sales to government shall not be credited against output tax from sales to non-government entities. Next is the input tax. If the input tax that cannot be directly attributed to either VAT-able or exempt transaction shall be prorated and only the VAT-able portion can be allowed as tax credit. Input tax attributable to VAT exempt transaction shall not be allowed as tax credit but should be treated as part of the cost or expense. Next is the input tax attributable to zero-rated sales may be refunded or applied for tax credit certificate. So, in appointment of input tax on mixed transaction is if taxable sales to private divided by total sales times input tax is equal to creditable. Taxable sales to government over total sales times input tax is equal to creditable. Exempt sales or divided by total sales times input tax is equal to expense or cost. Noted, subject to the 7% standard input tax provision if that sales is into government. So, here is the sample illustration for the sample illustration. SDT Corporation has the following sales during the month. So, sales to private entities, subject to 12%, 100,000 pesos. Sales to private entities, subject to 0%, 100,000 pesos. Sales to exempt good is 100,000. Sales to government, subject to 5% FWT, 100,000. Total sales for the month is 400,000 pesos. Next is the following input taxes were passed on by its VAT suppliers. So, input tax on taxable goods is 5,000. It is subjected to 12%. Input tax on zero-rated sales is 3,000. Input tax on sales of exempt goods, 2,000. Input tax on sales to government is 4,000 pesos. Input tax on depreciable capital goods not attributable to any specific activities monthly with a monthly amortization for 60 months is equal to 20,000 pesos. So, input tax attributable to sales to private entities. Tax on sales subject to 12% is 5,000. Rateable portion of the input tax not directly attributable to any activity. So, total sales of times 12% over total sales times amount of input tax. So, 100,000 pesos divided by sales of 400,000 times 20,000 pesos is equal to 5,000 pesos. So, IT attributable to sales of private entities, it is 10,000 pesos. So, input tax attributable to zero-rated sales. IT on zero-rated sales subject to 0% is equal to 3%. So, if it is a zero-rated tax. Rateable, so same as the 10,000 pesos divided by 400,000 pesos times 20% is 20,000 pesos is equal to 5,000 pesos. IT attributable zero rate sales is equal to 8,000 pesos. The 5,000 pesos there plus the 3,000 pesos. That's why it became 8,000 pesos. Input tax on sale of government. So, since you have in input tax directly attributable to any activity of 5,000 pesos. So, plus 4,000 input tax on sale to government it is your ITI attributable to sales to government is equal to 9,000 pesos. So here is you have already in input tax not directly attributable to any activity of 5,000 pesos. So plus the input tax on VAT on same sale of 2,000 pesos. 5,000 plus 2,000 is equal to 7,000. That is your total IT attributable to VAT exempt goods charged to cost or expenses. The journal entry on government transaction is cash of 107,000, final holding tax of 5,000, sales of 100,000 pesos, and an credit of output tax of 12,000 pesos. Or output tax of 12 debit of output tax of 12,000 pesos, credit final withholding tax of 5,000 pesos, input tax of 7,000 pesos. Assume input tax available for government transaction is 9,000 pesos. So the entry to close input tax is cost or expense, debit, 2,000, credit of input tax of 2,000. So the journal entry, assume that your input tax available for government transaction is 3,000 pesos. The entry is debit, input tax of 4,000, credit, cost or expense of 4,000. So the summary is VAT subject to 12%, VAT for VAT liable transaction, and allowed to claim input tax of 12% on the purchase of goods and services. Zero rated is subject to 0%. Local sales 12%, allowed to claim input tax of 12%. Option to claim TCC on excess input taxes. Effectively zero rated. Sales to zero rated entities is subject to zero. Local sales of 12%. Compliance on the requirements of 133 and IRC. So, optional registration, any person who is VAT exempt under the section 41091B 1V may elect to be VAT registered. Any person who is VAT registered but enters into a transaction which are exempt from VAT makes transaction may option that the VAT applied to his exempt transaction. Any person who elects to register shall not be entitled to cancel registration for the next 3 years. Next is the franchise grantees of radio and or television broadcasting with annual gross receipt on exceeding 10 million pesos. This option, once exercised, is irrevocable. So here are the penalty for failure to register as VAT taxpayer. Taxpayer shall be liable to pay the tax as if he was a VAT registered person. Taxpayer cannot avail of the benefit of input tax credit for the period it was not properly registered. So invoicing requirements. A VAT registered person shall issue for VAT invoices, VAT official receipt, information in the VAT invoice or VAT official receipt. So it is stated there. So the word VAT exempt sale written and printed prominently if sale is VAT exempt. The word zero rated sale written and printed prominently if the sale is subject to 0%. So here is the sample invoice for the tax. Next is the filing and payments of due dates. So filing of return. Every person liable to pay the VAT shall be filed a monthly return every 20th day of the following the close of each month. Quarterly return if every 25th day of the following the close of each taxable quarter. Any person whose registered has been cancelled within 25 days from the date of cancellation of registration. Only one consolidated return shall be filed by the taxpayer for his principal place of business or head office and all branches. So, synchronized filing quarterly VAT, quarterly income. Here is the sample. Here is also an example for the percentage taxes. Submission of SLSP. So, here is your summary list of sales and summary list of purchase. Persons required to submit their submission. All VAT taxpayers with quarterly gross sales receipt exceeding to 2.5 million. All VAT taxpayers with gross purchase in excess of 1 million pesos. On due date is on or before the 25th day of the month following the close of the taxable quarter. So here is the taxable of privileges of the store, also known as the tianguis. Or the tianguis, not permanently obligation exhibitor of the organization post the certificate of recognition of the organizers. Obligation to deduct withhold 5% due on the 10th of the following month. Obligation to inform the RDO. Obligations to ensure presentation of TIN. It is that your TIN number is in the BIR. So, remittance of the actual EWT and percentage tax. Obligation to report to BIR non-compliant privileged store operators. Obligations of privileged store operators. So, here is their obligation. First is the obligation to deduct and withhold the EWT on rentals payment. Obligation to pay advance percentage taxes. So, the advance percentage taxes, location of privileged store, city or first class municipality, municipality other than first class municipality. So, here are their percentage taxes set up in air-conditioned place. So, their tax would be 150 per day or 4,500 per month. Non-air-conditioned is 100 per day or of 3,000 per month, 3,000 pesos per month. So, in the municipality other than first class municipality, if their business is a air conditioned place, so they have to pay 75 pesos per day or 2,500 per month. If non-air conditioned, 50 pesos per day or 1,500 per month. VAT treatment of the payment for security and services. So, background. Income tax, cash basis or accrual basis. When in computing the income tax, we will going to use the cash basis or the accrual basis, maybe adapted as accounting method for reporting the income. The timing of the imposition of tax depends on the accounting method employed. Next is the value-added tax. Sellers or services including security agencies have to be taxed solely on the cash basis upon actual or constructive receipt of income. So, the value-added tax. Gross receipt must constitute the gross income of the taxpayer when received or earned. If amount received does not form part of the gross income, the same cannot be part of the gross receipt subject to VAT. Next is, do the salary of security guards form from the taxable gross receipt of the security agency? Here is the answer. Prior to, like, D. So, this is not. So, income tax, this is already the income tax. Journal entry. Next is the